Hey everybody, Boris this week at Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for February 25, March 1, 2019. And the interesting thing in the common dollar land this week is that despite the fact they kind of ended essentially where they started, there was far more volatility than met the eye here. There was some serious movement. In fact, some of the biggest movement I think in months in the Aussie dollar and Kiwi dollar off of change of news regarding China, the cold deal with the province, and then a lot of RBA rhetoric around it. So the interesting thing is I think some of the levels have moved off. Now, if you look at the Aussie dollar, it's essentially ended up pretty much where it was, but 72 now is a very strong resistance. The more important point here is because of the very negative reversal that we saw on Thursday, this 70.50 now becomes the very key support. If you're long Aussie, this is the level against which you trade. If they break that level, it becomes a much more negative trade than it currently stands. Kiwi, same kind of a story. 67.50 is the level against which you trade if you want to stay long. Both biases remain mildly long in those currencies, but they've certainly been weakened by the very big reversal flows that we saw on Thursday. And then finally, the biggest story was dollar CAD, which the CAD had a big move today and Friday, really supported by strong oil prices and a little bit better than expected news. The problem for CAD fundamentally into the next week is that we're very negative, almost all of the Canadian data. So you would need some positive upside surprises or just a continuation of the move in oil, if possibly move all the way up to the 60 to really bust towards that 130 level on Canada. Overall, Canada certainly stands the best amongst the three common dollar economies because it is not nearly as dependent on China, and any positive development on a trade front between U.S. and China just simply creates a much better easing tension across all of North America and provides Canada with the opportunity to hike rates going into the end of the year. Remember, Canada is the only other central bank in the G7 universe that's even hiking rates along with the U.S. as we go forward. So when we look at the calendar next week on the common dollar land, we just have a smattering. There's actually a couple of interesting things. Trade balance and trade balance, which will be a relatively important release out of New Zealand. We've mildly bearish this because manufacturing PMI weakened, although dairy prices did give us a boost. The thing with trade in New Zealand is one or two items could move the number very quickly, so it could be positive, which could provide a little bit more of a boost for it. The big data will be all of Canada this week. We have a CPI data, which we're bearish on because there was pretty sharp drop in prices all across the board. That may not be a big hit to Canada, although certainly a really sharp decline in CPI will keep the BOC at bay. But more importantly, as we move into the second half of the week, the latter part of the week, the other stuff that comes up now in the common dollar land, basically Australian Manufacturing Performance Index, building permits out of New Zealand, all of these are sort of second-tier data with not much of an impact. But finally, we close up on the GDP data coming up on Friday. This is also against the GDP data that we see actually in the U.S. on Thursday. And here, the numbers are expected to be lower. And that's the key thing. If that number comes in significantly sharply lower, that certainly keeps the BOC at bay and could push dollar CAD higher. But that is all the way to Friday. From here to Friday, there's still potential here, especially if we get oil prices moving, for loonie to appreciate as the beginning of the week starts. Let's take a look at the charts here and just see all the reversals we saw in the common dollars this week. So here's Aussie. And Aussie had this very negative flow yesterday. It was basically a combination of, I think it was Westpac that decided, basically calling for the RBA to begin cutting rates, something that nobody's expecting just yet, but they were making a call that RBA is going to essentially begin cutting rates. RBA remains in a neutral mode. Governor Lowe essentially reiterated the fact that they're going to stay in a neutral mode, but it really was non-committal either way. That provided mild boost for the Aussie. The big hit for the Aussie was the fact that there was fear that there was retaliation amongst the Chinese against the highway boycotts, and that was denied, and that provided a little bit of a boost to the upside. Overall, we closed the week here generally positive, I think, Aussie tone because U.S. and China are continuing to negotiate. In fact, as I'm speaking right now, they're negotiating through the weekend. And so the market now is anticipating this kind of an easing of the Cold War of trade between U.S. and China, which in turn, of course, is positive Aussie. So there's a chance here to go to the upside. But having said this, the upside here is very much capped by this flame out candle. It's not impossible to retrace this whole candle, and it would be very bullish if we did. In other words, we completely engulfed this candle to the upside and took out the highs. That would be a very bullish construct. But that's a very tall order for now. I think the best you can hope for is perhaps a rally to the highs here. The most important thing is if you're long, you really have to maintain, I think, the stop underneath the lows here around 70.50, because if that breaks to the downside, this whole situation, which looks mildly positive and looked, of course, a little bit better last week, turns pretty ugly bearish at this point, and then it really begins to drop below the 70.50 towards a very, very key test of the 70, and turns the whole thing, which has been a building kind of a mildly upward move here, into a full distribution top and a move to the downside. So I think a lot of interesting things could happen this week, depending on where the levels are. It's very much worth watching. The risk right now is very minimal in Aussie, but it is very much very significant if it breaks to the downside. Kiwi, same kind of a story. Kiwi looks even a little bit more bullish than Aussie. Had a pretty nice move reversal here with a big doji move here. Still did not engulf yesterday's highs. And if we come out next week and close out above Thursday highs, that would be a very key bullish signal. Because what you have here, if you did that, would be a close. We closed above the 20 SMA, but then a significant close above the 20 SMA at that point, and a much stronger higher low structure that you have here. So again, 67, just like 70.50 in Aussie, 67.50 is the very key level here. That breaks to the downside, all of the bullish bias goes right away. So trade accordingly as you look at the charts. And finally, here's the strongest chart of the week. We close really beautifully right on the lows of the day. This is very bullish loony, but the key with Canada is it very often tends to have these one step forward, two steps backwards kind of moves. So it's not inconceivable that we could retrace some of it back. Still, this is the key thing here. As long as we don't retrace back above 32.50, the bias here is clearly to the downside, and you have to respect it. I think the ultimate move here is going to be trickled down to the 130s, especially if oil gets where's U.S. oil here? Here's U.S. oil was somewhere here. I thought I had it here. This is the old quote, but we're at 57 on U.S. oil, and that is very, very bullish. And if we move towards the 60 level on oil, it certainly behooves a 130 on the dollar CAD. That's pretty much how the COM dollars shape up. Still mildly bullish after all of the bruises and battles this week, but be very careful of those levels once they start to turn to the negative side. Wish you guys the best luck, the best trading. Boris, over and out.